Hello, everybody. My name is Scott Forehand. I'm with Symmetry Financial Group, and we're here today on our regular Debt-Free Life Infinite Banking presentation. And today we have a very special guest. Yes, Jeff Sigworth, the Jeff Sigworth from Symmetry Financial Group, our very own advanced markets guru, is here today to pour into us and give us some of Jeff's wisdom about these programs. So, Jeff, how are you doing today, buddy?
I'm doing well, Scott. How are you?
I am fantastic, and especially since today I get to watch you instead of driving. I'm pretty excited to sit back and drink my coffee and let Jeff do his magic. So, Jeff, any
You're gonna
words
have
of
to be the
wisdom before
client.
we get rolling?
Well, you're gonna have to be the client.
Oh, I gotta play the client.
You're
Okay,
gonna play the client.
I'll play the client. All
Yeah,
right, all right,
yeah.
Jeff. So, anything we need to know about? Anything you want to set up before we get into this?
No, I just want, when it comes to the debt-free life presentation we're gonna do today, I want everybody to see and acknowledge the system on the journey that we take the client through, the different sections, how my inflection brings the client up, brings the client down, how many questions I'm asking, I'm taking control of that client and directing their attention. And I think that's the magic here, is really taking control of that client and controlling where that client is looking, what they're answering, and ultimately controlling their understanding of debt-free life.
Okay, fantastic. I'm all ears. Well, ear. I'm deaf in one ear, so I got one ear. So all ears.
I knew that.
There you go. All right,
You've told me that.
let's see it,
All
brother.
right.
Come on.
All right, Scott. I bet you're curious how we're going to get you out of debt and build wealth without spending any money every month, Scott.
Yeah, that's not too good to be true stuff. I don't see how you can do that.
All right. Well, I'm going to show you.
All right.
So first, we got to keep the attorneys happy. I need to tell you that I'm not an attorney, thankfully, nor am I a CPA. So if you need specific tax or legal advice, I need you to be okay with stopping me and saying, hey, let's consult the attorneys and the CPAs. Are you okay with that?
Sure.
Okay. Now, last time we talked about a couple concepts. Do you remember what those concepts were, Scott?
We talked about me getting out of debt.
You getting out of debt. Do you remember debt snowball or debt avalanche?
I remember debt something.
Yeah. So for you, it was debt avalanche. And debt avalanche here, we're going to take your overpayments. After we got all your information, we're going to take your overpayments. We're going to redirect them. So let's say you're making an overpayment, a $20 overpayment to one credit card, a $20 payment overpayment to another credit card, and a $60 overpayment to an auto loan. We're going to go down to your minimum payments. We're going to consolidate those overpayments, and we're going to attack, in your case, the highest interest rate. Debt avalanche, think of it as a sheet falling off a mountain. It starts big. So biggest interest rate is going to be attacked first. There's also debt snowball, where we attack the smallest balance, just like the cartoons where the snowball starts out small and then it gets bigger over time. But in your case, we're going to do a debt avalanche approach. Okay.
Okay.
Now, do you remember infinite banking? You remember we talked about that a little bit?
Yes, I do. That's what
Okay.
I really like, the idea of that tax-free piece.
Yeah. So infinite banking is where we set up a highly specialized participating whole life policy. That's why I asked you some insurance questions last time. We're going to capitalize your bank. We're going to be able to pull money out tax-free and pay yourself back, all while getting guaranteed interest and dividends on the full amount of the money inside of Scott's bank. Okay?
All right, so wait a
Now,
minute. Let me ask you this question. Are you saying that
Yeah.
we're going to put money in here and we're going to take it out and use it, but we're still going to be earning interest and a dividend with it at the same time?
We are, yes.
All right. All right.
Yeah. All right. So that we're going to commonly refer to that now from here forward as Scott's Bank. Okay. This concept's been around for decades, but we are bringing it to modern times, making it simple and approachable and easy to use for everyday folks like you and me. Wealthy people have been doing this for decades. You had to read a very complicated book, but right now with their exclusive software and these products, we can bring it and make it approachable and usable for you.
Okay.
We also talked about amortization. Do you remember amortization?
Yeah.
Yeah. It's kind of how the banks get one over on you. The breakdown of the amount of interest versus the amount of principal due, and how they make us pay the interest first. Okay. Now I bring that up again because the software is going to break down your amortization schedule of all of your debts. And we're going to combine debt avalanche in your case, the infinite banking concept, and this special software that breaks down the amortization schedule. And we're going to find the most effective way to pay down your debt. And that's what you're here to see today, right, Scott?
Absolutely.
All right, cool. Now this part's very important, buddy. We're gonna go over each one of these again, and I want to make sure you understand exactly where the money's coming from. Scott, you told me you were paying $74 a month for an insurance policy, correct?
Yep.
And what was the death benefit on that?
200,000.
You told me that if it made sense, we get you more insurance for a longer period of time, that you were okay redirecting that $74 in this program to see what it could do for you, correct?
Yep.
Okay. You also told me that you were making a consistent overpayment to your consumer debts, your auto loans, your credit cards, your solar panels of $220 a month, right?
Yeah.
And if I could show you a way where we could take that 220, make it more efficient by using those concepts we just went over, that you'd be okay making those payments and redirecting them into the plan.
I definitely would be. Yep.
Okay. You also said you're making a consistent overpayment of $100 to your mortgage to pay the principal down faster.
Yes, I did say that, didn't I?
And yeah, you've been doing that for over a year, and that you would want to add that to the program as well.
Okay.
Okay. You said you're making a $500 investment to savings. You didn't know where else to put it. And you had $30,000, or you had $67,000 in that account. And you said you wanted to keep around 30. So what I'm going to do is I'm going to show you a redirection of that $500 in the program. And instead of keeping just 30, why don't you keep 37,000 in that savings account? And I'll show you what that $30,000 looks like to jumpstart the program.
Okay.
Okay. And you said that you're open to seeing what that can do for you.
Yeah,
correct?
definitely. Yeah.
Yeah. You also said that when I asked you about income, you said, hey, Jeff, I do have $100 rolling around on my checking account that I wouldn't miss. It maybe a happy hour here or there. You wouldn't miss it, and you'd be okay with an additional $100 being added.
Jeff,
to the
that's
total.
a happy half hour. Sorry.
That's a happy half hour. I know. And you wouldn't really notice it being gone. Right?
Okay. Right.
So Scott, this may seem like a lot of money, but that's $994 of redirected money and
Wow.
$30,000 to jumpstart the program. Okay.
Wow.
Now, Scott, we can move these numbers up. We can move these numbers down. We don't even have to move forward, but I want to make sure that you're okay with using these numbers right now just to see what the program would look like.
Definitely. I want to see what it looks like.
The information you gave me. Okay, great.
When would I need to have this ready?
We'll talk about that. Talk about that. Here's where you are currently with respect to time. And on your current plan, this is exactly what it's going to look, what your life would look like if you just stayed on your plan, on Scott's plan. Now, which debt is first here, Scott?
Southwest.
And do you remember why it's first?
You said it was because of the highest interest rate.
Yeah, debt avalanche. You're paying attention.
Right. Yep, by the way, that BMW is not mine. That's my wife's.
Okay. I mean, you can't drive a BMW, right?
I can't. She won't let me.
Now, you're not making an overpayment on your Southwest card. With no overpayments, how long is it going to take you to get out of debt with that card?
That says 2 years and 7 months.
Okay. Now, I don't know if anybody remembers the AmeriCard, but the Bank of America card, you're making a slight overpayment of how much, Scott?
About $115.
Even with that overpayment, Scott, how long is it going to take you to get out of debt on that card?
Wow. 2.5 years.
Has anybody ever showed you that?
No.
You got your solar panels? You're making how much of an overpayment on your solar panels, Scott?
$50.
$50. Even with the $50 overpayment, how long is it going to take you to get out of debt on your solar panel?
Wow. Yep. 11.5 years.
11.5 years.
They said it was
Now
only
you
going to take me
probably,
10.
yeah, well, the software is breaking down amortization. Okay, the math doesn't lie. The Forerunner here, you probably know you're around 3 years left on your Forerunner,
Yeah.
a little over a year and a half on your Beamer, and you probably know your house. Everybody knows their
Her
house at
Beamer.
25 years.
Her Beamer.
Her Beamer. Sorry, her Beamer.
Right, right. Her Beamer. Okay.
So is that kind of news to you on some of that consumer debt?
Yeah, that solar thing is really, really interesting. And I thought that extra payment I was making, especially I was paying almost double what my minimum is for my Bank of America card. It's going to take me still going to take me 2.5 years. Wow.
Yeah. So our goal here today, Scott, is to get this paid off faster, right?
Yeah.
Now, here's something that's amazing. Here's something that a lot of people don't know, and nobody has ever shown them this, and I want to show you today. How much consumer debt do you have right now, Scott?
Almost 60 grand.
60 grand. So from this point forward in the future, how much additional money are you going to pay to the banks?
Looks like about 12,000 and change. That's
So
that's
Scott,
almost 25% of what I owe.
yeah. So even though you only have one credit card over 20%, when we break down the amortization schedule, your real interest rate is 20.65%.
Holy cow.
How much do you currently owe on your home, Scott?
580 and change.
If you stay on your plan, how much additional money are you going to pay to the banks?
Wait, they told me my interest rate 38.15%. That's not my interest rate.
Yeah, what was your interest rate, Scott?
Uh, it was less than 5.
Yeah, it was 2.74, I think. But when you get an interest rate on a credit card or your home loan, what are the three little letters after that number?
APR.
So that stands for
APR.
annual percentage rate, right?
Yeah.
You pay your mortgage or any of your bills annually?
I don't pay them off every year. No.
No, well, but you don't make those payments like on your mortgage. You make that payment monthly, right?
Right, right.
They give you the annual percentage rate, but they charge you that interest on a monthly basis. And when you break down amortization, that's your real interest rate. Would you buy your home at a 38.15%
Hell
interest,
no.
right?
I'd be cardboard boxing it at that rate.
But that's your real interest rate. That's really what you're going to pay over the life of your loan moving forward.
Wow.
So Scott, if you were to write a check today to pay off your all of your debt, what would that check look like?
Apparently $641,000.
So moving forward, Scott,
I got that in my
you,
back pocket. Hold on. Right.
let me make a call to the bank, see if that clears.
Right.
How much scheduled interest are
Holy
you going to
cow.
pay the banks on your plan?
Wow. That's more than 30%. Wow. Oh, I bet that's 38.15%. Just guess.
Little bit less. So
Okay.
Scott, what's your real debt? How much do you really owe at this point?
I thought I was a millionaire.
Yeah,
Not quite there.
$875,000. So Scott,
Wow.
if I could show you a way to take some of this scheduled interest, take it away from the banks and put it back into your pocket, would that get you fired up?
Yeah. Sign me up.
So Scott, using debt-free life, I'm going to explain the details here in a second, but you are going to be debt-free in 12 years in 10 months instead of 25 years.
You cut it in half.
Mm-hmm.
Okay.
All right.
So I'm blind in one eye too. So all ear and all eye.
Scott, by using a highly specialized participating whole life policy designed around section 7702 of the IRS code, which allows you to get guaranteed interest and dividends, borrow from yourself tax-free, pay yourself back, we're going to get you out of debt in 12 years and 10 months. Now, let me ask you, Scott, do you know of any other vehicle that gives you guaranteed interest and dividends, even when the money's outside of the contract?
Well, I mean, I can borrow from my 401k, I think.
You can borrow from your 401k, but how old are you?
I'm 52.
52. So you borrow from your 401k. Are you going to pay it back by the time you hit 59 and a half. Or by the time you separate from service. It does you, do you have in a
I don't know.
401k, do you have guaranteed interest?
Well, I know that when I borrow from my 401k, the part that I borrow doesn't participate with market gain anymore.
Yeah. If you have $100,000 and you take 50 out, what's subject to market gain and loss?
50. Yeah.
50.
Wow.
Right? Could you do it in a,
So
could you
wait,
do it
hold
in a
on.
savings?
You're telling me I can have my money in the program. You said this earlier.
Absolutely.
Use it and still earn interest and still earn a dividend with it?
It's called non-direct loan recognition.
Wow. Okay.
Okay. Could you do it with a savings account? There's no risk in a savings account, but what's the problem with a savings account?
Well, my savings account earns 0.25% interest because I'm with Bank of America.
Well, this earns a heck of a lot better interest than that. And we'll go over that in a second. But it also doesn't duplicate or doesn't give you.
Oh yeah, if
interest
I
and
pull it
dividends
out
when the
and
money's
use the money,
outside.
I guess it's gone. It's not earning interest for me anymore. Okay.
Completely gone. So Scott, I'm going to walk you through your debts. Okay. We'll walk you through your program with your numbers.
Okay.
All right. You ready? I need you to understand this and I need you to explain this back to me. Because if you can't explain this back to me, we can't move forward.
Okay.
So, all right, Scott, what debt's first?
Southwest.
Again, why is it first?
Because it's got the highest interest rate.
That's right. Now, on your plan, these numbers are a little old, bear with me. On your plan, when is that scheduled to be paid off?
Next March.
Next March. On the new plan, when's it scheduled to be paid off?
In 1 month.
In 1 month. Remember that $30,000 that you put in?
How we do it?
We're gonna get that $30,000 working for you right away. And in fact, the first 3 are going to be paid off right away, but I'm gonna look at them individually if that's okay.
Sure.
Now, in 1 month, Scott, what's your payoff going to be on your Southwest card?
38.70.
How did we get from 39.67 to 38.70 in 1 month?
Looks like my monthly payment of 169 crept in.
But if you take 169 out of there, you're just at like 37 and change. But why didn't they give you credit for all that?
That 169 is not just payment.
All principal.
Yeah, that's not all principal.
Remember, I told you the software is breaking down that amortization schedule.
Yep.
So I want to make sure you know that software is in the background working for you.
Okay.
Now, Scott, where are you going to get this 38.70.78? Where's that going to come from?
You just said we were putting $30,000 in here. Right? So what you're saying is in 1 month, I'm going to owe 38.70.78. Right?
Correct.
And you're saying we just put 30,000 in here, so that means I'm taking, I guess, the 38.70 out of the program from that 30.
Yeah, out of Scott's bank. So Scott, would you give Scott a loan?
We call it Superbank, Scott's Superbank, because I'm feeling a little bit like Superman at this point. Hey, yes,
Scott Superman.
Yes, love it. There you go. Yep.
There you go.
Call me Kalel.
Scott Superbank.
Okay.
That's supposed to be the Superman shield, but
right
I can't draw.
All right.
So would you give yourself a loan?
Yeah, I'm dependable.
Yeah. You're good for it. So as soon as that 38.70 hits your account, what are you going to do?
I'm not taking the money and run, man.
Can't do that. You said you wanted to get out of debt in 12 years and 10 months.
Oh yeah.
Didn't you say that?
What now?
You said you wanted to get out of debt sooner.
I did say that, didn't I?
Yes, you can't take the money and run.
All right.
I think that's Steve Miller Band. I don't think you can Steve Miller Band this.
It is Steve Miller. Yeah, buddy.
So you're gonna,
You don't have quite as much gray as I do, but at least you listen to good music.
Thank my parents for that, Carol and Jim. Yeah. You're gonna pay off Southwest, correct?
Yes.
So once Southwest is paid off, what's that gonna free up for you, Scott?
Well, I'm not making that $169 a month payment anymore.
Well, you're gonna make it not to Southwest. Where do you think you're going to
Oh
make it? Where do
yeah,
you
you
think it
just said
goes
I
now?
borrowed the money from myself,
Yeah.
so I'm going to pay
So
myself back.
now you're going to pay yourself back. Do you want to collect the interest on that money, or do you want Southwest
Right.
to
So
benefit
now
from it?
it's not Scott's Super Bank anymore. Now it's Scott's Super Duper Bank.
Super duper deluxe bank.
Yes. Well, that's next, I guess. This is deluxe. Right.
And how much interest did that save you on that first transaction?
Holy wow.
You
Wow.
can get Donna a new purse with that,
Or at least one new shoe.
or at least one new shoe. Don't get crazy here, buddy. What debt is second?
Okay. We're
Okay.
going to do the Citibank Visa card.
Yep, your gas card.
Yep.
On your plan, what's the payoff date?
I guess it's July.
On this plan, what's the payoff date?
Yep. Same time as previous. We're paying them all.
Next month.
We're paying off those three debts in first month.
Yeah.
Okay.
Where are we going to get the 770 from?
We're going to borrow it from our bank, which had the 30,000 that we put in there to begin with.
Yep.
What
are we going to do with the
Super
770
Duper Bank?
Super duper bank? What are we going to do as soon as that 770 hits your account?
We're going to send a check to the Citibank Visa card and pay that puppy off.
What's that going to free up?
$78.
Where's your $78 going to go?
I'm going back, and now it's going to the Scott Super Duper Deluxe Bank.
Yeah, it's going to go to Scott Super Duper Deluxe Bank. And now how much total money is going back into your bank?
Oh, yeah. Okay. So that's 169 plus the new 78. Okay. I get it.
So now how much is going back to your bank and the interest you're collecting on that?
247 every month is what's going now. And I just saved another $70 of interest.
$70. That's a nice bottle of wine for Donna, but you can't drive her BMW.
Right.
What's your next one? Bank of America.
Bank of America. Yeah. Those guys have my savings account that are paying me 0.25%. Thank you, Bank of America.
What's your current?
Okay.
Your current plan? What's
January 2 years from now.
Okay. Again, this one's in 1 month.
Wow.
Where are you going to get the 47.25
from? It's coming from the 30 that I put in.
Or from that 30. Yeah. What are you going to do when that's 47.25 hits your account?
I'm going to go ahead and send Bank of America a check. And now we're looking at $86 a month more that was just freed up, which is now going to go into Scott Super Duper Deluxe Spectacular Bank.
I like the alliteration here, buddy.
Yeah, Super Duper Deluxe Spectacular, SSDS.
Now we add that to the 247. So now how much are you funneling?
Yep, $333 a month. Right.
333. And how much did that save you?
$824. Wow.
Scott, let's look at the solar. You were what's that?
That's over $2,000 in interest we've saved in just the first month. Simply by spending this money a little bit differently than I was planning on spending it. That's pretty bad.
And this is only $100 more than you're spending right now.
Right.
So Scott, when were you with your solar? You were like surprised to see it was going to take you.
It was 11 years. Long? Yeah, it was going to be 11 years to change.
Now, how long in this program is it going to take you to pay off your solar?
Wow.
So Scott, where's this 18,728 going to come from?
I guess it's coming from the balance of that 30 that I put in, plus what we've been paying over the last 4 months in this plan, I guess.
Yeah.
Okay.
Yep. We're gonna
333 for 4 months. Okay.
Yeah. So what we're gonna do is we're gonna borrow from ourselves. What are we gonna do? We're gonna write a check to what?
To the solar company.
What's that gonna free up?
$150 a month.
Where's that gonna go now?
Back into my super duper Scott Special Super Duper Special Bank.
Spectacular Bank.
Spectacular, stupendous bank. There's another S.
There's another S. And now, how much is being redirected?
Wow. Okay. Yeah. Right on, man.
Now, you can take Donna on vacation. How much
Yeah,
did you save in
7,700
that
in
deal?
interest. Yeah, that's Donna's. Now we're going to Italy.
Now you're going to Italy.
I'm for Sicily.
Okay.
Baby.
Does that make sense, Scott, how
Yeah,
that's
man, this
working?
is awesome. But does it really work, man? I mean,
Yeah,
this is
I've
nice
seen it
pretty
work.
numbers, but does the thing work?
Yeah. So Scott, we got to get you addicted to paying back your debts. If you like the plan and you stick with the plan, and there's a lot of flexibility in it, but if you stick to this plan, I can tell you the exact day you're going to be out of debt.
Wow.
Okay.
12 years and 10 months, apparently.
12 years and 10 months. Now, Scott, there's going to be a time, 3 years and 8 months, where the IRS is, if you try to redirect too much money back into your bank, IRS is going to smack your hand and say, too much money in this thing. Okay. And in 3 years and 8 months, we're going to have a conversation of where to put this 1534. Now, was the economy a little different 3 years and 8 months ago?
Absolutely.
Do you think it could be very different 3 years and 8 months from now?
Damn sure hope so.
I sure hope so too. That was a great answer. Yes, I do too. And in 3 years and 8 months, we're going to talk about exactly what to do with this and maybe even create a second bank. Okay. But look what's going to happen, Scott. I'm going to be with you and by your side in 1 month, 5 months, 1 year and 6 months, 1 year and 7 months. And anytime anything happens financially in your life, we have to have the relationship where you feel comfortable calling me and talking through it, kind of like your attorney, right? But I am here all along the way to help you through this plan should anything happen financially in your life. But definitely 3 years and 8 months, we're going to reevaluate where this 1534 can go because you don't want to pay taxes, do you?
No, I don't.
Perfect. Now, Scott,
Unless I really owe the IRS, if you happen to be watching this video, I'll be happy to pay my taxes.
So Scott, how much total interest saved do we have here?
65,000. That's my wife's next BMW.
Not, yeah, it could be. Not only are you out of debt in 12 years and 10 months, including your mortgage, we saved you $65,000. And now, if you continue to fund your banks with the same amount of money in 20 years, how much is in your banks?
Over $500,000.
Over $500,000. When were you originally scheduled to be debt free on your plan, Scott?
25 years.
25 years. 5 short years later, how much is in your bank at that point?
1.387 million.
Let me ask you, Scott, does your current plan put you on track to be a millionaire?
Well, I don't know how much my house is going to be worth. There'll be money in my house. My house will be paid off.
Yeah, your house will be paid off, but your house is paid off here in 12 years and 10 months.
My current plan doesn't do that.
It doesn't do that. So I think you can see the benefits of debt-free life.
Okay.
So Scott, we kind of talked about non-direct loan recognition, where you get full credit of interest and dividends, even while the money's outside your plan. You get to borrow from yourself, tax-free and not the bank. You're building an asset, not funding a liability. It's a self-completing plan. If you get sick and you have a terminal illness, a chronic illness, or a critical illness, or you, God forbid, something happens to you, it's a self-completing plan where you can get money out of this contract. You get advice from a Pennsylvania publicly educated person like me.
I'm not sure I'd advertise that.
Millersville University. I'm going to advertise that.
No, Pennsylvania.
There's nothing wrong with PA, dude.
I'm playing, man. I love PA.
I know. I'm just teasing you.
Yep.
The potential to lower taxes.
My uncle used to be your attorney general, by the way. Just say it.
Really? I did not know that. We have the potential to lower taxes in retirement with tax-favored retirement by taking loans out, supplementing your retirement tax-free. And now by giving your money your $1 multiple jobs, we're creating wealth. Okay. Scott, this is a carrier illustration. I'm going to go over these columns. Your takeaway here is a couple things. One, I want you to cross-reference this when it comes from the insurance company to make sure it matches what I have here. And if it doesn't match what I have here, there's got to be an explanation for it. Either your health came out better or worse because it is health-centric. And I want you to know here that in a participating whole life, the guarantees are that the death benefit and the cash value meet at maturity. So if we put more cash in, the death benefit has to go up. Okay. So contract premium, this is what you put in here in a year. You've got the $30,000 plus the 944, it comes out to 41,928. The guaranteed cash value is 36,588. And with that, your guaranteed death benefit is 1.1 million. Now, remember I told you you get dividends. Do you know what a dividend is, Scott?
Yes.
It's like, remember we used to play life and get dividends.
Yep.
So here, we're going to get a $332 dividend. And because we get add cash value, what has to happen to the life insurance? It has to go up in kind. Remember? Yep, it has to go up.
Yeah.
So if we take guaranteed cash value plus the dividend, it equals the total cash value. If we take the total death benefit and we add it to what's called the paid up addition, because it's 332 added $1,300 of death benefit, we get the total death benefit. Okay. Now, these two columns are about a 97.66 repeating guaranteed chance of happening. The three companies we use have been around for a collective 300 years. They have all paid their guarantees. One carrier, 1 year of the Great Depression, didn't pay a dividend. So it's pretty darn close to a guarantee. Wouldn't you agree?
Yeah.
Okay. So again, the takeaway here is you add cash value to the policy, you're going to add death benefit, and you're going to have this cash value to borrow from and pay yourself back from. But we want to make sure this matches exactly what comes from the carrier.
Okay.
And then Scott,
a lot of numbers.
The next steps. What's that?
A lot of numbers.
It is a lot of numbers, and we're going to go over them when the contract comes through. Now, the next step, we're only going to make our minimum payments on the debts going forward. We're going to redirect those inefficient dollars into the plan. We're going to apply for the insurance. After you get approved, you're going to schedule some time to meet with me to pay off those first 3 loans. And we're going to get you on your way to being debt-free in 12 years.
Awesome.
10 months.
Awesome. Okay.
There you go.
Hey, if I found another $20,000, could we put 20 more in?
You can. Yeah. Are you expecting $20,000?
I am.
You are? What is it? What is the source of that $20,000?
I'm going to the casino this weekend.
Well, Scott, if you get that $20,000, let me know. We can find a home for it. If you were certain that you were going to have that $20,000,
well, I know I'm going to win. I also got lottery tickets, which I know are winners. I just haven't scratched them yet.
You haven't scratched them? The cardboard crack?
Mm-hmm.
Yeah, we can massage a plan and make it fit your needs. But when you get that money, just let me know.
Okay. You want me to send it to you? Is that it? You'll do something. You'll find a safe place for me?
Yeah.
All right. Well, Jeff, of course that was awesome. So let me go ahead and stop our recording and before we finish, Jeff, thank you very much for coming today.
Thanks, buddy.
I appreciate, I hadn't seen your presentation, but stellar, just great job, man.
Thank you.
Certainly explained a lot more, some of the nuance that went in a little bit deeper than I do with some of my stuff, but I'm going to steal some of it if you don't mind. But
nope. That's how I did it. I stole it from other people.
And Jeff, so if you had any advice to, because this is going to be airing as recorded. So any advice to people that are attending? Anything you want to say to those folks about?
Yeah, don't be scared. Don't be scared. Dive in. Ask questions. Direct your client's attention. It really is about focusing their attention on where you want it. I think you can make complicated things very simple if you walk them strategically through the process. Don't be afraid of it.
Okay. Now, if the person who's watching this happens to be a potential client for somebody, because I know a lot of agents refer their clients to these videos, well, do you have any suggestions for those folks?
It's a great question. I would say stay within your means. Don't see this. Oh my God, I'm going to put everything. Start with what you're comfortable with. Get used to that. We can always add or take away or massage things later. Start with what you're comfortable with. Get intimate with that, and then start bank number 2, 3, 4. The father of infinite banking had 45 of these when he when he passed away and over $1 million
Right.
of outstanding loans.
Right.
So be
proof
be
that debt is not a bad thing if you know how to use it
yeah.
right.
If debt is not a bad thing if you use it correctly. So start with what you're comfortable with, and then we can always contact whoever introduced you to the concept, and you can always start bank number 2.
All right. So I got one last thing to say. Again, thank you very much, Jeff, coming and I know taking time out of your very busy day. If you're an agent, hopefully you got something out of this. If you're a broker, hopefully you got something out of this. And if you're someone who's looking at infinite banking or the Symmetry's debt-free life program, get with whoever invited you. Have a frank, open conversation. And look, no debt's off the table. Any debt you have is something that should be eliminated. It's not going to do anything but help your program work better and help you have a much safer and stronger retirement. So be honest, okay? And last thing is this. These programs are flexible, like Jeff said, right? So something happens, life happens. I had a client, she ended up having to buy a water softening system about 3 months after her program started. All we did was add that debt in, recompute, and it actually made her program work faster. Okay, folks?
More debt, the better.
Yeah, more debt's better.
The more debt you have, the more efficient it works. The more inefficient dollars you have, the better this thing works. So don't be shy.
Exactly. So thanks for tuning in. And Jeff, again, thank you for everything.
Thank you, buddy. Good to see you, Scott.
Yep. All right, hold on one second.